There are quite a few areas which need to be opened up or need to be tackled. A simple one is recovery of debt. Recovery of debt is still a very painful process. Even after you have the NCLT and after you have the SARFAESI and all, it's not easy. It's not about a housing loan, it's about any loan. It's not only to individuals, it's even to the corporate sector. The legal system is not geared up. The way the businesses have grown in India, the legal system or the efficacy of the legal system is still not right, because overseas decisions by courts are much quicker, much faster, and they are implementable.
Given that you are only 78 years young, what is your new initiative going to be and when are you starting it?
Sir, just on the
I think it's a very tall order for someone to start a bank at this stage. A digital bank maybe, but not a brick and mortar type of bank, because competition is so severe that it may be easier if you have some PE support or some sovereign wealth funds and you have some money, buy an existing bank and grow it. There's far greater opportunity in that than starting a bank scratch. And a digital bank, they may be, but every brick and mortar bank is also a digital bank.
Yeah.
Everyone is going towards that.
Done, sir.
So make some money in Fintech and buy a small bank.
Done, sir. Thank you.
Yes, sir. Why didn't you merge it?
The reason we didn't merge Credila was the process of merger is the same that we went through in HDFC and HDFC merger. Now, the total assets at that time, there was 15,000 crores, and the merged assets are how many lakh crores? We had 25 lakh crores. So to merge a 15,000 crore with a 25 lakh crore, it would take the same 1 year with multiplicity of approvals, and it was not worth the effort. It is better that the bank starts giving education loans directly and make some money out of our investment.
Okay, Deepak, the last question for you is, what advice do you have for the 1,000 people in this room?
There's nothing like working honestly and with integrity. It pays in the long run.
Thank you so much. It's been a pleasure and an honor to do this with you.
Yes, the India and the stack that is already there, enabling digitization of existing players, I think is going to be there as a huge disruptor. And I will, for a moment, talk of the global opportunity, because this stack, from what I have seen, and I have seen banking sectors all through from the time we started off in 1997 to today. What has happened? How evolved are these? Most countries it is not evolved, so that's also an opportunity. So Digital India, the Fintech world in particular, has an opportunity to scale what they have done across India and globally. So they should look at it this way. If regulation was a barrier, then we would not have today. What's happening here would not have happened. And we would not have heard from the governor what he said yesterday. He believes that the Reserve Bank clearly believes in co-creation, because most of these initiatives that have been taken, starting with NPCI, is a co-creation effort. And from there, allowing things to flow in a very even manner, in a manner which is not going to have risk built layer on layer, but in a manner that risk is understood and then you roll out what was called the sandbox approach. I think is what's going to drive business, and they will, from what I could see, continue to be partners.
View of fit hair, free hair, which is what you believe to be the case. What are the imperatives for fintechs as they look at their own, financial muscle and their own financial strength?
See, I want to, maybe the audience doesn't know the fit hair and free hair. See, what all the entrepreneurs here have done is clearly proven that the technology they have is, if you had to ask fit hai kya, answer is absolutely, resolutely yes, fit hai. So they have proven it. And benchmarking with technology that was available over the last 20-25 years, stalwarts have built it and so on. But technology that has been built here is fit. And free hai is a way of speaking. Free hai doesn't mean that it is at zero cost. Everybody has to make adequate profit, reasonable profit. You can set your degree of reasonableness yourself, but you have to make profit. But compared to what you are used to pay, this is virtually free. That's what I mean, free hai compared to what you are paying. So I would think that everyone is today building that sort of platform, and that will be what will attract users to it, whether it's a bank or you become a bank and you progress. And this is happening in a world where I say there are 4 Ds at play. So it is demographic. Demographic is not our old definition of demographic. Demographic, what I mean is a great leveler where a young person of 20 and a person not so old of 70 use technology almost as facile. Not exact as facile, but almost as facile. Then you have got technology which is demonetized. In a way, the phrase monetized. Demonetized. Demonetization, I mean, you go at the other end and see things which are today, take an Airbnb or a Uber, to me it's a demonetized. At every end, when you look at these, this is where the new technology is used. Dematerialized. You don't need to look beyond the device in your pocket. It now does 10, 20 things which otherwise you were doing physically. And there are several more Ds I can add, disruptive, digital, and so on. But this is the universe that this universe plays in. The reason I talked about this is that every year the touch point is digital. In all these 4 Ds or 5 Ds that I talked about, everywhere touch point is digital. And that's what is going to drive India, and indeed the globe as we go along. And you serve India, and you have a larger opportunity for serving the globe.
That point you made. And since we're talking for the economy, the opportunities it opened up, and what could potentially be lessons here for us?
Yeah, again, I think the vast differences in what has happened there and what has happened here. Yes, they went into payments very early on. WeChat and Alipay went into payments very early on. But the rest of it is very interesting. If I were to actually look at the Chinese bank, it's far less digital than an Indian bank. An Indian bank. But there are technology enablers who are 5 years back or 4 years back, when I lived there, probably were at a better, at a higher level than in India. But in 4 years, I can say this without any hesitation, there is virtually no area where we are behind today. And that is to me the biggest driving force for us.
Companies in India who make more than 1,000 crore rupees in profit after tax, approximately 28%, that's 180 companies are in the BFSI space. Given the opportunities that you believe this sector can enjoy, what could that number potentially look like?
100,000.
100,000?
I'm not kidding. There are 100,000.
In the heart of South Asia, 2 nations share not only a border but also a rich history, culture, and a deep-rooted bond. India and Nepal, neighboring countries with much in common, are now poised to embark on a new journey of connectivity and prosperity. As technology reshapes the way we live, work, and interact, the boundaries that once divided us are becoming less relevant. The digital revolution is bringing our nations closer than ever before. In this revolution, we unveil a historic technological collaboration where the 2 trailblazing companies led the foundation for a historic journey. NPCI International Payments Limited, also known as NIPL, is an international arm of NPCI dedicated to fostering global connections through payment corridors. And PhonePe, Nepal's largest and most trusted payment system operator. This means for customers of India and Nepal, one can securely and conveniently make instant payment through QR code across various shops and merchant stores by using the mobile application certified by PhonePe and NPCI. For merchants, it opens doors to a broader customer base, accept payments from a vast cross-border market, making business Whether you're trekking in the Himalayas, savoring the flavor of Indian and Nepalese cuisine, or marveling at the architectural wonders, our two nations are open to all who wish to experience the magic they offer. As we stand at the cliff of the future and technology, let this partnership between NIPL and PhonePe be a beacon of collaboration and a symbol of progress. From the heart of India to the peaks of Nepal, our journey continues empowering lives and bridging borders through digital payment services.
This beautiful moment, in the form of a Kodak or a camera moment as we call it.
Driven economy as compared to a credit driven economy, but there is a world in between, and that's a potential opportunity. So this is, we're looking at what are the categories that exist in the retail credit space. So categories, and we've looked at the x-axis, which is looking at the growth in value terms, and the y-axis, which is giving us growth in volume terms. So fast moving categories have really been credit cards and two-wheeler loans. So vehicle loans overall you can see is in that space. And credit cards is not surprising. We've moved from something like 40 million credit cards as of 4 years back. It took about 25 years to get to 40 million credit cards. And in the last 3 years, another 45 million credit cards has been added. So that's the kind of growth we're talking about. And on the other end of the spectrum, we have home loans, a very mature category, which really isn't showing much of positive growth. But personal loans, credit cards, two-wheeler loans, some of these categories are really out there in the fast-growing pace. So while broadly retail loans is growing at 20%, what is more interesting, and the graph does not reflect, is smaller value loans are growing at a faster pace. Smaller value loans, in the 10,000 rupees, 20,000 rupees, 25,000 rupees category are growing at a much faster pace here. And while 70% of value of the loan book comes from banks, when we look at volume, it really also opens down to players who are moving into the space of smaller ticket loans. And we'll come to that later in terms of how to open this opportunity up, that 85% of loan volume book that we are looking at. And the last two numbers here really give another sense of how to address this. When we look at about $1.9 trillion of retail economy, we're looking at it in three parts. We saw that big bubble which was for home loans. We have auto loans, both of which contribute about 9 and 3% of that book. However, 88% really goes back to a generic consumption category. What do we do? What do we purchase? Which includes travel, dining, shopping, apparel, etc., etc., etc. So that's a big untapped space, and that links back to the UPI story, because UPI is all about consumption. UPI is all about purchasing goods and services, and how do we start linking these two to open this opportunity up? We are on search and we are looking for information. So 2 weeks worth of time is being spent on that, and maybe some people do a lot more. 55% are using online tools. They may be looking, including at influencers and so on and so forth, and we've read a lot about some of the malpractices happening there. And 25% are doing this in regional languages. So saying home loans and vehicle loans, in the last few years, consumer durable loans have become extremely popular. Can we do travel loans, right? So the population wants to have experiences, travel domestically, internationally, etc. So loans focused on travel, which means that's the only purpose for which the credit is being provided. It can be controlled using UPI in the actual application.
5 years ago, we had only 20 million demat accounts in the country. Today, we have 110 million, 11 crore demat accounts. So, India is changing fundamentally. This is to this room, to this audience, give, because they know they have been part of that journey. how it is being built from a government perspective is very important, right? I mean, we have tasted the fruits of success of all these public stacks that we have built. ONDC is the next one. I'm sure we talked about ONDC. Nandan mentioned it yesterday. The Prime Minister has been talking about it. But why it is more critical? For two reasons. First of all, non-rent seeking, what UPI changed in payments, but also to solve for Bharat Pay. Enable and empower that every single merchant in India can send all money. That's been the dream.
These 35 million households would probably contribute to like 80-85% of all saving deposits, right? And India is a huge country where we should actually see growth across the cohorts, but we do not see that data yet. Today, if you look at the credit, will have a strong correlation to ability to pay taxes, ability to pay consistent taxes. That number is public, and you can see the number of people paying taxes still, like, or filing taxes like 60-70 million. People who are actually paying some taxes around 25 million. So we are still in that vicinity, but there are opportunities in agri where I am hearing a lot of rural markets are showing extraordinary promise, because now with digital infra, you can create new business opportunities and actually give them access to credit to kind of do well, right? Today UPI, a lot of UPI acquiring companies are able to provide loans to merchants and starting not yet accessible getting credit starting. The 10-15 years will have a very different shape, more people kind of getting access to credit. Our focus was of people who are credit worthy, give them superior experience, but I think most people become credit worthy through different mediums, with account aggregator, the UPI data, the GST data. There's going to be so many interesting opportunities in the merchant space, SME space, where a new set of affluent classes will get created, and I think we are going to see a shift on that for a long time. However,
the social spread out, now people earning 20 lakhs plus, 10 to 20 lakhs, 5 to 10 lakhs, so on. Now, typically, if you see payments, it's penetrated right down. The savings, almost well penetrated by now. Credit, less penetrated, I'll demonstrate that to you. Investments, like I said earlier, really it's not that India has very many people investing in mutual funds, etc. Numbers increasing, we know it's 10 crores, but it's still a small number when you see the country. And if you see the life of people who are earning 5 or 10,000 rupees or 20,000 rupees, even 1 lakh is a lot of money for them. And they also need wealth management. We'll talk about how. And of course, insurance. We talked about the fact that they have more need for insurance than the rest of the Indian system. Yes, next. Now, the reasons could be many. Most issue in terms of challenges are about, in the case of savings, it's high cost to serve, branch interface, investments, high cost to serve. In the case of credit, high cost to serve, plus an issue about credit cost percent to GDP, while most of the countries are running in the zone of, say, 70, 80, 100%. That is, all the developed countries are out there. Now, it's just housing loan yarna pana kotta build on நான் கேட்குற எவ்வளோ பேருக்கு கொடுத்தா ஹவுசிங் லோன் வாங்கிப்பீங்க? நீங்கள் வாங்கிப்பீங்க? ஹவுசிங் லோன் ஹவுசிங் லோன் ஹவுசிங் லோன் ஹவுசிங் லோன் ஹவுசிங் லோன் 70% ஹவுசிங் லோன் ஹவுசிங் லோன். எவ்வளோ ரெண்ட் கட்டுறீங்க? எல்லாரும் நீங்கள் வாடகை இருக்கீங்களா? எவ்வளோ ரெண்ட் கட்டுறீங்க? எவ்வளோ வாடகை எவ்வளோ கட்டுறீங்க? நீங்கள் கரெக்ட் யாராவது வாடகை இருக்குங்க? हमारी बैंक से आपने से कितने लोगों ने कर्जा लिया? करीब करीब 12। आपने कितना लोन दिया? मेरा 2 लाख। Bank में private bank does not, but technology is the only one that doesn't differentiate. Okay, ATM gives you the same amount of time for giving a cash, whether to a poor person or rich person. More controlled ecosystem, whether it is KYC, income verification, booking, collections, operations, monitoring, whatever. Now the thing is that on those guardrails, that will be very useful. Now on the basis of this platform, digital lending platform, with these guardrails, data, cash flow and technologies will open a dramatic opportunities for digital lending. Let's move.
So the white space is now the great, three and three quarter trillion economy. You take it to the 25 trillion. That gives you enough white space to grow, thrive, and survive. So I don't see any white spaces at all. I lack a white space on that. No problem.
But
So yes, the India and the stack that is already there, enabling digitization of existing players, I think is going to be there as a huge disruptor. And I will